Good morning and welcome to the Killik & Co market update. This week we've had the announcement that Boris Johnson is the new Prime Minister of the United Kingdom. This was really no surprise to anybody given that he was so far ahead in the polls, and that's probably why we saw hardly any market reaction on the day of the announcement. Sterling was down just a touch, down about 0.3% on the day. But what's perhaps more interesting is looking at the movements in sterling over the last couple of months as Boris has moved ahead in the polls. So have a look at this chart here, which shows the movements in trade-weighted sterling over the last year. So trade-weighted sterling is just the rate of sterling measured against a basket of other major trading currencies. And you can see that sterling has fallen quite heavily in value over the last couple of months. And probably the main reason for that is that a no-deal Brexit is seen as being more likely under Boris. So despite the fact that it is seen as being more likely, I think it's important to note that it's still not seen as being the most likely option. To put that into perspective, Goldman Sachs has recently raised the possibility of a no-deal Brexit from 15% up to 20% now that Boris is the new Prime Minister. Now, although sterling is down over the last couple of months, the UK market is actually up, and that includes both the FTSE 100 and also the more domestically focused FTSE 250. Now, it is quite usual for the UK market to move inversely to sterling, but perhaps another reason for the market being up is that a number of Boris's proposed policies do seem to be quite promoting of growth. For example, he wants to cut taxes and also he wants to increase government spending, so we'll have to see what happens there and whether or not he manages to get any of those policies through. In the meantime, our analysts have put together quite detailed notes on their current thoughts of the UK market, so please do give us a call if you would like to receive a copy of that. Back in January, we talked about the failure of a dam at an iron ore mine owned by Vale in Brazil. Following that, Vale was forced to close a number of its iron ore mines due to safety concerns, and that had the effect of reducing the overall global supply of iron ore, pushing up the price. And that higher price has certainly benefited other iron ore producers such as Rio Tinto and BHP Billiton. However, this week it's been announced that Vale has been given approval to reopen a couple of its mines, and that's likely to have the effect of increasing the global supply of iron ore once more and possibly therefore reducing the price. So if you have a look at this chart here, this shows the price of iron ore futures. And as you can see, they've risen quite steadily between January and July due to that reduction in global supply. However, over the last week, since the announcement that Vale can restart production, we have seen a reduction in the price of iron ore futures, and that implies that investors do expect the price of iron ore to fall. So that could potentially be bad news for other companies in the sector, and I would recommend that you give us a call if you do own any shares within this sector. And finally this week, the US Department of Justice has announced a review into the lack of competition within big tech. Now, the department has not said exactly what companies it will be focusing on, but I think it is fairly obvious when you have a look at this statement. So the statement is that the department's review will consider the widespread concerns that consumers, businesses and entrepreneurs have expressed about search, social media and some retail services online. So I think that quite clearly says that the companies under investigation will be Google, Amazon and Facebook. Now, on the day that this review was announced, we didn't see much of a reaction in these share prices. All of them were down just a touch, but perhaps that's because people have been expecting for quite a long time that there will be a greater regulatory focus on big tech. But nevertheless, we will be keeping an eye on the progress of this review. Now, moving on to the week ahead, lots of companies reporting and the calendar is looking fairly busy. It's quite a big week in terms of UK banks reporting, and we have got results coming out from Lloyds, Barclays and Standard Chartered. That's it from us. Have a great weekend and we'll see you next Friday.